well, good afternoon. Thank you for joining us here today. My name is Shannon Workman. I'm from Schools First Federal Credit Union, and I'm excited for this presentation. I also have my colleague here with me, Krista Norwood. She'll be giving a little bit of great information at the end. So we're going to go ahead and get started. I think I may need to continue to admit, because I don't think we're quite at the number yet, but we're going to get started. So, I mentioned I'm with Schools First Federal Credit Union. I oversee our financial education programs. So my team and I are out in the schools providing financial education for professional development days, just as this, as well as in classrooms, usually seniors in high school and older. So we're providing for students as well. And we really just love our job and love the opportunity to share some best practices. We've all been working with members at credit unions or at banks for many, many years with their finances. And we have a lot of really good information we feel like to help students of all ages, including our school employees, hopefully learn some best practices and take away some things, even if they're just a lot of little things, can really add up to big differences. So with that, today we're going to be talking about taking control of your finances. And, isn't that a great thought to be able to really just take control rather than your finances controlling you? Having your you be in control of your finances makes all the difference in the world. I also wanted to mention, just to share, I'm not sure how many of you are members of Schools First or another credit union, but I just always like to start off by sharing a little bit about the credit union difference, just to make sure everyone is understanding of what credit unions are and what we do. And definitely providing financial education is at the core of what we do, of our mission of people helping people. And like I said, all day, every day, we're throughout the state of California providing financial education, and that's so important to us. So the difference between a credit union and bank, they're very, very similar in that they're both financial institutions helping people with their financial needs, from savings accounts, checking accounts, debit cards, credit cards, auto loans, mortgage loans, all these same kinds of things that you can get at a bank, you can also get at a credit union. However, there's a lot of differences, and I'm just going to touch on one right now, and that is the ownership structure. So a bank is owned by its stockholders or its shareholders. So it's a small group of people, and typically that's who the bank staff need to be really focused on making happy, is that those stockholders, shareholders get a really great rate of return. Just like when you invest money, you want your money back plus a good rate of return. At a credit union, however, if you are a member of a credit union, it doesn't matter if you have $5 or $500 million or somewhere in between, you are a member owner of a credit union. You have one vote. Everyone is equal, democratically controlled. And that's probably the biggest difference of a credit union and a bank, is that ownership structure. So really knowing that, because we are going to be focused on our owners. Banks are focused on their owners, but they're needing to make more profits to give back to their shareholders. At a not-for-profit cooperative like a credit union, we're focused on our owners, but our owners are every single person who has an account. So we really want to make you happy. We really want to make sure we're meeting your needs, and that we're helping improve your financial health and well-being. Thus the reason for us making sure that we want to provide financial education. So with that, we're going to get started. So today, let's see here. There we go. So probably the best way I can share with you as a best practice, after working with lots of members over the years with their finances, that you can take control of your finances, is by working with a budget. Now, I know that most of you probably are not sitting there thinking, I love to budget. That is like my favorite thing to do. I love the word. I love the word budget. No. In our experience, we know that most people kind of have a negative connotation to this word, and they really kind of feel like, or what we hear is, they feel it's restrictive. They can't do the things they want to do. They just really don't like to have to budget. And we always say to our members, well, we ask you to keep an open mind, and we really would love for you to think of this word as a positive thing. because by allowing yourself to see a budget as a positive, it's really going to change your mindset in the sense of taking control of your finances rather than just kind of, spending your money and then wondering, hey, I wonder where all my money went. By budgeting in advance, you are taking control, you're planning for your money. And really, what we know is that your budget is your plan. So if you don't like the word budget, call it your plan. It's your financial plan or your savings plan or your spending plan. But truly, it's you're planning for your money in advance, where it's going to go. You're taking control, you're directing it. So I also know that there's a few things. A lot of people are not budgeting, which kind of leads to the reason why most Americans are struggling. So they're not in a good thriving position with their finances, but they're kind of living paycheck to paycheck. So we don't want that to be the case. We don't want the majority of our members, or even the majority of Americans for that matter. We want to be able to help everyone. Again, credit unions are founded on people helping people, and we still live by those principles today. So we really want to help our members, and we're in the community a lot also, anyone that we're working with, understand that a budget is a really positive thing. It can help you take control of your finances. It is your planning for your money. So it's definitely going to help you be able to reach your financial goals. So that's something that's really important. A best practice is figuring out what your goals are for your money. But why would it be important to budget besides reaching your goals? I'll share with you. A lot of studies are done about money. What we find is, in study after study, is that by taking control of your finances and getting things in order and planning for your money, it helps you sleep better at night. And by sleeping better at night, it helps you have better health. Maybe you've heard of this word before, stress. Stress is something that a healthy level of stress is good, but once it crosses over into that unhealthy level, it causes physical problems. So our health takes a hit when we're not in a good place with our money and we're having stress with our money. So sleeping better at night, improving our health, hopefully having less even disease for that matter. Stress causes a lot of diseases. So we want to be able to prevent that. And even relationships. A lot of relationship problems are due to having stress. And a lot of times that stress is in regards to the struggles with finances. So taking control of your finances really improves your entire life, not only improving your financial health and well-being, but your overall wellness is definitely tied to good financial health. And basically, there's just 4 steps that we kind of talk about and go through when we're taking or putting our plan together. Oh, here, there we go. That we want to get our goals set. We want to know what it is we want to achieve with our money and figure that out, and then get that into those things into our plan as well. We want to get ourselves organized. You would be surprised how many people really do not know how much money they're spending in the different categories of their budget. So we want to figure that out and be able to really make those conscious decisions. So when we're getting organized, we might be able to identify some areas that, we really weren't aware we were spending that much in those categories. And then we can make those conscious decisions, maybe cut back in some areas. And then ultimately, we want to build this better budget. We want to save for the future, whatever that looks like for you. Every single member that we work with is different, but a lot of things are the same in regards to a budget. But every member is going to have a different budget, their own personal budget that works for their household or their family or even themselves, depending upon the situation. So I'd like to share about a member worked with a couple of years ago, actually, but she was a teacher. She was actually a high school teacher teaching chemistry. And she was in a situation where she had brought us in to help work with her seniors in high school and teach them about personal finance. And we're always happy to do that as well. So we're in providing this presentation in classroom for her students. And during the breaks, she wanted to have a conversation. She's like, I don't feel like I'm totally out of control with my finances, but I do feel like I could use some help to get a little more in control. And here's what's going on with me right now. I'm not paying a lot of attention to my finances because I'm getting my master's degree. Oh, and I also have an infant. And I've only been married a couple years, and I'm working full time. So her plate was really full. She was definitely in a situation where she had a lot going on, and she just really wasn't taking the time. She wasn't in trouble with her finances, but she knew she needed to get things in control. And one of the first things we talked about was, well, do you have any goals that you want to make sure get into your budget? She said, well, actually, yes. And she was actually kind of embarrassed, and it's like, well, we don't judge you. You tell us, and we'll see, how we can make it happen for you. We want to help you reach your goals. So her goal was to get a Louis Vuitton purse. She said, I just want to put it on my shoulder, and when I have it, I'm going to know that I achieved this. I worked hard. I got my master's degree. I'm only a few months out from getting my master's degree, and I want to treat myself to a really nice person. I want to have it forever. And I just want to look at it and know what it represents. And it's like, okay, sounds great. Let's get this into your budget. So we went through the process, getting her organized. We looked back at the last 2 months of her expenses in her account. Most everything had run through her account. So we were able to do an analysis of the account. And if someone doesn't put all their transactions through their account, then we'll kind of ask them to keep track of all their purchases for 2 months going forward. But in this case, we did a review, and then we came back and gave some analytical, here's what you've been doing. And you would think, she'd be aware of this. However, she really was kind of shocked by some of the things. One of them, and I know this is going to sound cliche, but it really is the truth of what happened. She was like, oh my gosh, I had no idea. We said, okay, so for the past 2 months, you've spent about $1,000 at Starbucks. Do you want to continue to spend $500 a month at Starbucks, and we'll build that into your budget? And her mouth just kind of dropped, like, I had no idea it was that much. I know I've been going a lot. I'm going in the morning, and then, I'm kind of grabbing stuff out of the refrigerated section to get stuff to go to for lunch. And then at night, I'm getting baby down, and then I need to work on my papers. So I need some caffeine. So I run over and I get something, and I come back, and, it's kind of my daily routine. But it's just small amounts. I didn't realize it's adding up to that much money. So we said, okay, you decide. Do you still want to go to Starbucks? Well, yeah, I really do. Do you still want to spend 500? No. And we said, well, how much do you want to allocate to Starbucks? And she said, well, let's do half. I will go half and spend half as much. So $250 a month, built that into her budget. We also identified some other areas that she made decisions on that she could cut back, and really just making her aware so she can make conscious decisions. So she was able to actually save up for that purse pretty quickly with the changes that she made. And then ultimately just building this better budget. There's a couple of different things that when we ask our members about their goals, if they haven't shared with us that they want to make happen, we highly encourage that. And number one is an emergency savings account. And we'll talk more about that, but we really want to make sure our members have money in an emergency savings account that's liquid and easy to get available if and when they need it. It's really a matter of when they're going to need it, because emergencies happen. Something happens to income or expenses pop up that we're not expecting. And this emergency savings account, studies have shown that are going to allow you to sleep better at night, not going to have as many arguments or problems, with loved ones discussing money, and just really gives you a better sense of less stress, better health. So that emergency savings account, so important. And then the second thing that if our members haven't said, hey, this is a goal, we highly encourage is really saving for the future in the sense of retirement. Because the sooner you start saving for retirement, the better it is for you. So we know that, and we will show that with projections and things for members who need that, to just really see how it takes a lot less of your hard-earned money that you're working so hard for to plan and save for your retirement, to cover that gap that you're going to be making less in retirement. If you start younger, you're not going to have to put as much as your own money because of that wonderful thing called compounding interest. Okay, so now this seems very like, of course, it's the number one rule that expenses need to be less than income. However, you can spend more than your income. And basically, what that means is you're taking on debt or you're just not able to pay your bills. You'd be surprised the number of people who are actually spending more than they actually bring in. And I can tell you in my experience, one of the reasons why that happens is because people don't know their income, which is kind of a crazy thought, right? Because everyone should know their income. But the problem is they know their gross, they know the total they're being paid. They don't know their net, how much they bring home. And you don't want to budget on your gross because you'll always fall short because you're never going to get your total. There's always going to be taxes and withholdings coming out. So we have to make sure that we are budgeting on our net income. And just that one tip as a takeaway can make such a big difference in, again, taking control of our finances. Okay. So you've probably heard of SMART goals. I know, all through school, we're hearing about SMART goals being specific and measurable and attainable and relevant and timely goals. But most of the time you're not hearing, make sure you set those SMART goals for your money as well. Money kind of tends to be a topic that families or people really just don't like to touch on too much. They don't like to talk about it. And we encourage you, talk about it with your family, create family goals. If we're going to go on a vacation or whatever we're going to do together, let's talk about that, work together as a family, and it really does bring everyone closer, and everyone enjoys whatever that goal is. Once you reach it, they enjoy it so much more, knowing that we all worked hard to move together to make it happen. But just setting goals for your money, you'll be further along than most, because most people don't. And then understanding the difference between needs and wants. And not necessarily are we ever in a position of telling our members, oh no, you shouldn't get what you want, you should just get what you need. We want to help people get what they want. So the difference is that you make those purchases for the things that you want confidently. So you've saved for them, you've planned for them, you're ready to make that purchase. But that is very different than, oh, I need transportation. My car's, on its last leg. I need to get a new car, get to work, get school, my responsibilities. So I need a car, but I really want that, you fill in the blank. Mercedes, BMW, Tesla, whatever, which can be the more expensive vehicles. The last thing you want to do is show up on a dealership lot and take a test drive in this car, and you haven't planned for it yet. And the next thing you know, you're signing the paperwork and you're driving off with this car with the new car smell, feeling like awesome, but you didn't plan for it, because that is going to create some stress when everything kind of starts coming together and that newness wears off and the payments start coming in, and then the additional insurance and everything that goes along with owning the vehicle, the registration. But if you've planned for it and it's been in your budget and you've been able to save up the amount that you need to keep it within your price range and within your budget amount, you're going to feel so amazing and confident about making that purchase. And then life stages, there's the different stages from starting college to finishing college to starting a career to starting, people that decide to get married or have children, all these different life stages. But it's not necessarily about age, is what I've found. So just recently, it was an example, a member who was 47, who she's actually a single mom at this point, but she has a 4-year-old child, 47. And then most of her friends who are 47 that she had gone to school with, or they're empty nesters now. So their kids are grown out of the house. And, this particular member of 47 has a 4-year-old. So totally in different stages, even though they're the same age. So, it's just kind of where you're at, what your needs are at that point. And then, planning for all those different expenses that affect you and your life stage. I know for me personally, I've been around decades helping people with their money, and I'm more kind of in the stage now where looking towards retirement and what I need to do to plan for, like, legacy planning with my children and my grandkids and that kind of thing. So just different aspects of what we're looking at different times of our lives. So this is some goals. This particular, or some examples of goals, I should say. This particular um, member basically was $1,800 short in their current liquid savings account for an emergency. So what we say to our members is, hey, we really want to try to get to 3 to 6 months of your essential expenses set aside in your emergency savings account. So whatever that amount is, basically looking at least 3 months. So in this particular case, this member was $1,800 short within the next year, would like to try to get that increased by $1,800 so that they have 3 months set aside. Now I can tell you that's kind of a starting point. So that is going to start helping to be able to sleep better at night so that when something happens, have that cushion and then, be able to use that cushion and then refund it. But some financial planners these days are talking about even as much as 2 years worth of expenses. After the pandemic that kind of started coming out, 2 years worth of your expenses put aside in an emergency savings account in a liquid account. However, studies have shown this is that people get overwhelmed by that number. It's so big. It feels like it's unattainable. It's not part of the SMART goals because it's like people just kind of give up. Like, oh, I'm not going to be able to get that amount. I'll rather just go spend my money on, you fill in the blank, vacation, whatever. So, they're not really motivated by that. So we say, let's start with 3, let's try to get it up to 6, and then we can always try to increase it from there. But start with the 3 months. And then on the bottom, you'll notice this person had mentioned that saving for retirement. So we encourage them, let's get retirement into your budget too. We encourage you to have that as a goal. And oh yeah, I really do want to retire one day. So, they're pretty young. They have over 30 years before they're going to retire. They do a series of questions, kind of lifestyle type things, how they want to retire. And in this case, the person was $1 million. They'd have $1 million less than they would need to fund their retirement. So we built that into a monthly amount coming out of their paycheck to go straight into their retirement. And then you'll notice the midterm goal there. Within the next 5 years, in this case, 3 years, we want to take control of this credit card debt. So they owe $5,000 on a credit card. It's just been kind of slowly ticking up. And now it's time to take control of it. And then let's pay it down. So 3 years, we want to be able to get that paid off. So that was built into the budget. But just side note, as far as how long it actually takes to pay off a $5,000 credit card if you're paying minimum payments that creditor is billing you. On average, with an average interest rate and an average payment amount that most creditors will charge for a minimum payment, it takes over 18 years to pay off. So that's no more new charges. That's just paying the minimum payment being billed every single month on your credit card. So it's like, whew, can you imagine? You took a vacation 13 years ago and you're still paying on it today, or your car broke down 15 years ago. You don't even have that car anymore and you're still paying on that today. That's not a good way to handle our finances. So we want to try to take control of it. And we say, okay, how much can we afford to pay every month? Great. That's going to get this paid off in 3 years. We're not going to put any more charges on there. If we do put charges on a credit card, we're going to make sure we pay it off in full every single month. And then we get this $5,000 paid off. All right, and we're getting ourselves organized. So we're kind of going to go through this process of tracking where it all goes. I mentioned about our chemistry teacher that, looked back at the last 2 months of her expenses. Another good practice is just kind of designating a certain time, maybe at the first of every month or the middle of every month, end of every month, whatever works for you, that you are reviewing your budget, you're reviewing your finances. Also kind of keeping everything all together, whether that's electronic or paper, but having it all, especially the personal information. If it's either way, it should be, protected, locked up. If it's paper, of course, you have password protected if it's digital. And then just so many studies have shown this, that if you use automation, how much more likely it is that you're going to actually achieve the goal. So putting things on autopilot, if I had to put money into my retirement every paycheck, I know I would not have the same amount of money in there as I do today because it's just kind of been out of sight, out of mind, automatically it comes out of my paycheck, goes right into my 401k. I know in your case, that's a different type of retirement. As a school employee, you're looking at 403Bs or 457s, but having those still automatic makes all the difference in the world. Like I said, if we had to transfer money every time into our retirement account, odds are we're going to find something else to spend it on. But automation is just wonderful. It just makes such a big difference. Okay. And then as we've gone through tracking or seeing where all our money's going, and that's when we get to figure out, is there any place that maybe I can make some changes? Maybe I'm spending extra money on things I really didn't even realize. You would be surprised how many people really have no idea how much money they spend on food. That is one here, we can't survive without it for very long. And yet most people really don't know how much they're spending. They haven't really budgeted an amount to spend on food, whether it's eating out or buying groceries. They're really just kind of ballparking it. Okay. Now, I did not ask whether or not the chat works. So I'm wondering, oh, I am now seeing the chat. I hadn't even brought this up. So a lot of you have made comments. Thank you. I'm not sure if there's anything I need to address on here. I'll kind of scroll through really quick. Okay, so what I'd love is to have any of you kind of just mention in the chat to share with each other and your colleagues if you've done anything that's really made a difference with your finances, whether it's helping you save more or bring in more income, because that budget has two sides. I love Kenya just mentioned using the summer saver. I'm assuming that's at Schools First, that you're using that summer saver and getting that really great yield. Yes, wonderful. Yes, makes such a difference, right? To see that money going in at that high yield every single month. And then for the summer, you're in such a better place, right? You can confidently enjoy your time off. And then I'm seeing Sarah would cut the Starbucks. Yep, this is something that is a definite truth. Can you open a summer saver at any time? Yes, you can. And I know Krista, at the end, Krista's going to be sharing some things about Schools First and how we can help improve your financial health and well-being as being a school employee. So some special things to share with you. So we're going over that. Auto withholdings, don't have to think about it. Yep, exactly. We are on the same page. I love this. I refinanced my car at a much lower interest rate. Ooh, so you're saving overall total amount of interest, plus you're saving monthly. I love that. Sherry, automated saving paid for my son's college at UCR with just $100 a month. Oh, nice. Great tip. Love that. Sherry, did you start that when your son was just like born? That would be a great one to know how long you had been doing that for. And then using coupons online and buying things on sale. I love that. Absolutely. So many people are kind of embarrassed by coupons. I think coupons are like, they motivate me. I love them. Thank you, Nidya. And Jasmine, I do automatic transfers to a summer saver and a separate savings. So I have the emergency fund and backup emergency fund. Nice. You are being proactive. I love that, Jasmine. Very nice. Once one opens a credit union account, is there any reason a standard bank account would need to be retained? I think that's what becomes worrisome for me, too many accounts to keep track of. Now, yes, you can have as many accounts at different financial institutions as you want to have, but you also want to know, what your limits are, because you don't want to have so many that you kind of forget about them, or maybe you have something that helps organize to know what your different accounts are, but you can have as many as you feel comfortable with. There's nothing that says you can't have as many as you want at whatever institution. And that also helps, as far as additional insurance amounts and that kind of thing if you have really high balances. You don't have to keep it. It's not necessarily if you don't need it, right? You definitely can close it out. What are the requirements for an IRA account for working teens? Oh, I love how you're thinking there, Becky. So with my kids, both of them, when they were still in high school, now they're definitely grown adults now, but when they were still in high school, actually had them work during the summer and put money into actually a Roth IRA. So that happened for over a 4-year period without they were in high school, that money was basically growing. My son, when he got out of school, he was 22 at the time, he started working for LAUSD. That money he had invested when he was in high school during the summers working, he now had in his Roth IRA that helped him put a down payment on a condo. So really great idea. I love how you're thinking there to get them started off. The earlier the better. And they don't have to, they can let it grow until they retire. They don't have to take it out, but it is a great, there's certain things they can take it out for, like buying a home, that are allowable and makes, definitely helps them get them on the right track. You started in first grade with putting $100 a month. That is a great story. And a great accomplishment. Way to go. I know working with a teacher one time, when she was 9 months pregnant, her and her husband said, okay, we want to start saving for our child's education now. So what they did was they took a couple of hours one Saturday and kind of just brought out all their bills, and they started making calls. Hey, we want to reduce this. What can we do? Are there any promos? Are there any ways that we can lower our expenses? And then that first weekend they did this, it was like you said, less than 3 hours, a little over 2 hours they had saved like $300 a month just with those couple of hours. So that was $300 a month they could put right away towards their baby's that wasn't even born yet college education. They were being very proactive too. And then they said, you know what, we saved so much that, and we knew we hadn't got through everything. So they said a couple weeks later, they said, we're going to do this again. And they still were able to come up with a couple $100 more per month that they were saving by just taking some time to go through it and figure it out. So that's great. Kelly, no way. I'm a deal junkie. Not sure about anyone else here. I love great deals. I have a feeling, Kelly, we're in good company here. A lot of people that are coming to a taking control of your finances session are people who love great deals. And Becky, a trip from my financial advisor, use the every other technique, fancy dinner every other month instead of every month. Oh, yeah. Oh, I like the way that's put. I haven't seen that before. So the more expensive dinners, which we know nowadays can even be just like simple dinners, are pretty expensive, but the fancy ones, just planning for that every other month. I love that. And I have schools first for savings, checking, etc. Well, thank you, Sherry. And David, get an old reliable car. That's so true, that having a car that you don't necessarily have to have a payment on, but is dependable and isn't going to break down and cost you a lot of money in repairs, going to save you a lot of money. Jasmine, yes, I haven't had a car note in years and hoping I can keep it that way for many more. That's saving you a lot of money. I love that. Cooking food at home, oh, so true, saves so much. And Kelly, if you have a student loan and a credit card balance and a car loan, what are your thoughts about the best way to eliminate the debt quicker? Well, there's a few different thoughts on this. So there's some financial advisors that are going to say, take your highest balances and figure out your highest balances to your lowest balances and start paying off the low ones first, so that you're just getting this adrenaline rush, that this quick, like, paying them off, and it's really increasing your morale and inspiring you to continue to do what you're doing. That's one way. Or another way is to look at the highest interest rates, get them paid down first, so that you could save a little bit by paying more towards the high interest rate ones. Usually student loans are going to have lower interest rates. It really just is, Kelly, a matter of figuring out what your budget is. And I'm also going to let you know about some resources here in a couple of minutes that could also help with this, where you can actually talk with a certified counselor and they can kind of go through it with you individually, and kind of come up with the best plan for you, for sure. All right, and then there's a couple more here. Rachel, I use one account for bills and a separate account for my checking and debit card for my going out and having fun expenses. What a great idea. My paycheck is auto split during deposit, which makes it easier to stick to my budget. I love those suggestions. Very nice. And Jacqueline, I transfer balances to get the 0%. Okay, once my promotional interest rate is ending. So just kind of taking advantage of those low or no interest offers that are 3, 6 months, sometimes up to a year. that is great. You just have to kind of what someone else had mentioned, just keep track of that and make sure sometimes if you don't pay it off during it, they'll actually go back to the beginning and charge you the whole time. So you just want to make sure you stay on top of that because it could kind of blow up in your face there.
Hey, how's it going? Good.
Oh, was that Kelly? Oh, okay. Feel free to speak in if you wish. We can do it that way too. And then David mentioned it's risky as there's interest fee. Yeah, so that's the thing you got to be careful of there. And how much you're transferring can also, yep. Oh yeah, 29.99%. Very, very, very high interest rate. Yeah, you might want to look to your credit union to save some money there. Great. Schools First have any high interest options for 3 months safety buffer money. So like a high yield savings account. David, what I'm thinking is you're probably going to want to hear about the summer saver. And then there's also other ways if it's more than that you have saved, because there are some maximums on the summer saver. And then the 50-30-20 rule, monthly after tax income to 3 categories, 50% to needs, 30% to wants, and 20% to savings. Yep, very familiar with that. Is something I do know we work with a lot of university students, and we hear all these different things all the time from like TikTok. They'll tell us, share with us what they're learning from TikTok. And some of them are good and some of them aren't good. And some of them are just totally scams. So we definitely share with them how it's important to kind of vet them. Don't just believe. You'd be surprised how many unfortunately get ripped off. But these kinds of things like the 50-30-20 rule, I think that's, if you can live within that, that's wonderful. I know a lot of our members that we're working with, I'm going to show you in a moment, we recommend like 10% savings. And that's even hard for some people to do because of all, currently where they're at with their expenses. So we say, if you can't even, if you can't get to the 10% right now, let's just start. Let's get in a good habit. And then over time, we can get it increased. So it's kind of just like whatever works for each individual. But I wish everyone could be saving 20%. Wouldn't that be great? And then investing in treasury accounts. You guys have like so many great ideas here. I love this. The summer savers short term, not keeping it. Yep, that's so true. Once a year, sweep back over to you. And here's a great, it sounds like a book recommendation from Jennifer. I Will Teach You to Be Rich. Oh, yes, actually, I've started reading that book. Someone gave me that book. I'm only about a chapter in, but so far so good. And then Quit Like a Millionaire and I'll Teach You to Be Rich. Yep, and even The Millionaire Mind is another one I know many, many, many years ago read, and I think they came out with another version more recent. But yes, just kind of getting a mindset really is what that. So, and it's not necessarily in financial education that we're teaching people that we want to help you get rich. I guess if that's your goal, then we're going to help hopefully, figure out a plan for that. But not everyone necessarily has to be rich. In other words, save every penny of their money to get to a point where they're feeling like, they're confident. What we're just trying to do is help our members become confident in making their purchases, and also having that cushion, and having the being prepared and planning for retirement so they can live a lifestyle that they're comfortable with. But I love the idea of wanting to try to be rich as long as you're happy, in the sense, because I know there's a movement out there called the FIRE movement, to retire early. RE is a independently wealthy to retire early. And the thing that I've read about a lot of those is that they're kind of feeling like they're living kind of like paupers for a long time. So just like not spending any money really on anything, and maybe making some really big sacrifices. But if that's for you or if that's for them, I say go for it. But I don't think necessarily we have to live in a way that's so restricted if that's not what you want. So it's really up to you. Okay, well, you guys had great suggestions. I love all these great ideas, and just thoughts, and sharing with your colleagues is so important, and just to encourage one another to kind of just help you get to the point where you want to be and what's best for you. All right. So building this better budget, basically when we're going through this budget is we're just getting all of our stuff together. We're recording all of our income sources, listing out our expenses. We know our fixed expenses and our variable expenses that, every month are different. Our fixed, like our housing is usually, and our car payment is usually, even our car insurance, but variable things like our electric bill and the different things that kind of change each month, food even, especially when we're kind of been going through a period of time for a little while now that, things have been going up, especially at the grocery store. So now, most recent, I know things are starting to come down. So hopefully it continues to trend that way, but that can definitely be a variable expense. Okay, and then just totaling that all up, making adjustments as necessary. And it's really a best practice to make sure at least once a month we're reviewing our budget. We're making adjustments. We're figuring out, where we're at and whether or not we need to change anything up, just so that we're on top of that. All right, and this is the percentages that is recommended. Now in California, I know, unless you've been in your home for a while, 35% of your net income, what you bring home towards your housing, is kind of hard for people buying a home or even renting right now, because that's, 35% in California is kind of a low percentage. Transportation is going to include your car payment and everything else that goes along with transportation. I know you being at UCR, you might even be having to pay to park, to get to your job. Sometimes that's the case. So even that parking is part of your expense for transportation. 15% of it is where we want to, try to be. And then other is what varies widely per person. So if you have children, those expenses are in there. Or if you don't have kids, but you're still going to get your clothing and your entertainment and all these other needs are going to be in that other. And that's a quarter of our net income. And where I see the biggest opportunity is the debt, because this is really just our credit card debt and our student loan debt. And our goal is kind of to get that repaid, get it paid down. So that's going to free up an extra 15% of our net pay that we can put into other categories. And I had mentioned earlier about the savings account with 10%. That's kind of what we're suggesting we get started with. But I can tell you, there are a lot of our members that we work with that say, I can't do 10%. That's not really a reasonable amount. I'm barely trying to get by right now. Okay, so then let's do 1%. Let's do $1. Let's do whatever we can with each paycheck to get started. And then that's exactly what happens. Members are feeling like, wow, this is really making a difference. I'm seeing it grow. I'm getting motivated. And next thing you know, let's bump it up. I'm getting a raise. Let's go up, let's try to get it up to that 10%. Earlier, I think it was Sarah had mentioned about the 20% savings. If we can get there, even better. So if we could take that debt and put it over in our savings, that could potentially be 25% of our net going into savings. So we have liquid savings that's available for us right away, and then long-term savings like retirement. This is our budgeting worksheet. We work with a great company that has certified counselors we refer our members to, but you do not have to be a member of Schools First or any credit union for that matter to work with a Green Path certified counselor. So I believe, so this is an example of a worksheet. I'm going to give you some more information on Green Path in just a moment. You can even just use a spreadsheet. Heck, you could even just use a scratch piece of paper to put your budget on if you wanted to. But there's apps. There's all kinds of apps you can use. There's spreadsheets. There's that worksheet. Your financial institution, a lot of times you can classify all of your different expenses. As far as repaying debt, we say saving for your emergency fund, even if you have debt. Saving for retirement, even if you have debt. But maybe you have some other goals that aren't as important. Maybe we'll save those later after we get our debt paid down. And then you'll notice we say bad debt or okay debt. We really don't say good debt. Okay debt, things like I need to live somewhere. So that mortgage, fixed payment on my home for 30 years, that's pretty good. That's okay. Investing in my earning power by getting more education, taking student loans, as long as they're managed well and not overextended. Okay debt usually. Bad debt. Credit card debt is one of those things that we want to get paid down. especially bad debt, things like predatory, if it's payday lenders or check cashing places, pawn shops, all those different predatory things, definitely bad debt. It's very, very difficult to get out of that cycle once you get in. Making sure that we don't charge more than we can pay off in full each month. If we need to make a larger purchase, we really should plan for that and take control of it and pay as much as we can to get it paid down as much as possible. And I know one of our participants today had mentioned about seeking lower interest rates, and even those promotional rates, you just have to make sure you really are on top of those kinds of things. But even just bringing down, if you have a credit card debt that's in the teens and you bring it down into at 10%, you're going to save a lot of money. So that makes a big difference. And then just with your spending, you want to make sure you know your spending habits. You know, if you go to the grocery store hungry, you're going to buy a lot of extra food. So maybe I'm going to eat a snack before I head over to the grocery store. Or I know if I'm really bored and I'm scrolling through my phone, there's a lot of ways these days to spend money with a click of a button. And I don't necessarily need to be doing that. So I need to be aware of it and try to, stop myself. And then ultimately, we're saving for the future, whatever that looks like for you. But we hope you're definitely planning for your retirement, because that's something that we know a lot of people are, short on their retirement planning and savings. So the sooner you can get started, the better it is for you. Less of your hard-earned money that has to actually go towards retirement if you get started soon. And with that, I am going to, I didn't have my green path up, turn it over to Krista. I also do want to let you know, off of our website, you can find under financial wellness, Green Path Financial Wellness. And that there's a toll-free number there that you can contact, and those counselors can help you put your budget together and actually create your budget, get your goals into your budget, and help you in so many ways. If you have a lot of debt, they're able to create debt management plans and contact your creditors, get your interest rates lower, get your payments lower. You just make the one payment to them, and then they're out paying all your payments to your other creditors, and you're going to be out of debt. All the plans are 5 years or less. So with that, I'm going to turn it over to Krista. Krista, thank you for being here. You're muted right now. Feel free. There we go.
Thank you for letting me know that, because I was about to get started. Hi, everybody. Thank you so much for joining my partner, Shannon, and I today. Super excited to share this with you. Now that we've gone over like how to save, we want to make sure you're aware of how to do that with your Schools First membership. If you're not a member yet, we want you to know that you can sign up today. It's absolutely free. I did leave my email and my phone number there. I am the dedicated specialist from Schools First. I serve UCR. I'm all over campus. You might see me like at a little booth. Whenever I'm on campus, you can sign up for free. So please come and see me. I'm always there to serve. But we can help you sign up for free today. And we're going to go over that in just a second. For some reason, this is not jumping to the next slide, but that's okay. So want to share with you guys, one of the most popular savings account that we offer our happy members is our Summer Saver. The reason why it's so popular is because it's earning an annual percentage yield of 6.5%. Most liquid savings are only earning 0.5% or less. Like, you might literally see pennies being deposited saying, this was your interest earned this month. We want to change that for you. If you're not earning an annual percentage yield of 6.5%, this is free. It's exclusive for all our school employees. Once you're a member for life, and you keep it forever. It is a forever thing. It's free. And did I mention that it's free? You're able to put a max contribution of $2,000 a month. You don't have to have a checking account to set this up. So most major banks, Chase, Wells Fargo, even Altura, will allow you to link an external bank account for free. And some of your other credit unions will allow you to do that too. So what I'm trying to tell you is, you don't have to break up with your bank. We're not the jealous type, but don't allow your current financial institution to stand in the way of you taking advantage of things that you can substitute for what they're not providing you, like your Summer Saver. Other ways we help our happy members save are with our school employee credit card. Our annual percentage rate on our school employee credit card is as low as 10.75%. It never goes over 17.9%. Most financial institutions, you're in the mid to high 20s when it comes to annual percentage rates. If that applies to you and you have a balance right now, guess what? Bring that balance over to Schools First for free. We don't charge you, there's no fee. Bring the balance over. Let's bring your interest down. Let's help you save. I've seen people cut their interest almost in 1/3, which is a big, huge savings for them. Other ways we help you save is every dollar you spend, you earn 1.5% cash back. Some of our members are like, Krista, how do I get the most cash back? I'm like, well, you have to spend. So there's things you have to buy, right? Gas, groceries, Starbucks sometimes, right? Gas, groceries, you can pay your internet bill, your cell phone bill. I have had members come back to me and say, Krista, I got $40 back from the things that I bought last month. Favorite thing about School Employee Credit Card, it actually partners with your Summer Saver. They're linked together. So that cash back that you get from us, if you have Summer Saver open, it's going to go into this account where it's earning that annual percentage yield of 6.5%, and it's compounded every single month. Did I mention it's free? I love it so much. Let's go ahead and jump over to our School Employee Auto Loans. For those of you that are looking to buy a car, maybe you're thinking about it, you're interested, maybe you have family members that are like, you know what, I'm shopping right now. Our annual percentage rate is as low as 5.49 for new vehicles, used and refinanced 5.69. The average right now could be anywhere between 7 up with regular banks, depending on where your credit is. Please utilize your Schools First membership to help you save money when you're in the market for anything financially. If you ever get approved for anything higher than our lowest rate of the day, guess what? You make your payments on time. Every 12 payments you make on time, we will drop it 0.5%. So we get you to that lowest rate from the date you initially applied. And it's done without you ever having to refinance, put more money, time, and effort in. We already got you covered, and we're here to help you save hundreds over the lifetime of your loan. And that is how we do it. You're also able to skip your summer payments. We serve school employees, so all of our products, all of our services, they are tailored to fit the unique needs of school employees, even if you are 12 months, okay? But a lot of our school employees are not working in the summer, so guess what? You get to skip June, July, August, and September. So if Cancun is calling you, please call us and we will move those payments to the back of your loan. For those of you that are in the classroom environment, I want you to know we offer a $1,000 classroom supplies loan, 0% interest, which means we don't run your credit to give it to you. It is available in 3 minutes after you give us a call. We deposited that quickly. You pay it back $100 over 10 months, and you can take it out once a year. It's a great way to build credit if that's one of your goals. But honestly, this is super popular around Christmas time, summertime, Vegas time. I'm kidding. For those of you that are not in the classroom environment, we have what's called uniform loan. Same thing applies here, $500. We don't run your credit to give it to you. You pay back $50 over 10 months. You can take it out once a year. It helps you build credit if that's one of your goals. Really user-friendly, really convenient, really easy. We don't need receipts. We're just here to serve. Let us know how we can do that. When you become a member, you're a member for life. So many people ask me, well, if I sign up and I'm not working for the school in 3 years, like what's going to happen to my accounts? They're going to be there. It's a forever thing. As long as you don't close your membership, we welcome your membership forever. So you can always utilize Schools First to help you save money. And guess what? Your kids and parents can join, your brothers and your sisters, your grandkids, your grandparents, spouses, and even domestic partners. If you guys are living together, but it's not official yet, they can officially join Schools First because of you. If you're not a member yet, I encourage you to sign up today. It is free. Normally it's a whole $5. Today those $5 are on me and Shannon, so your next Starbucks is on us. I'm going to drop a link to our application in the chat for you right now, as well as the promo code where it asks you to put the promo code, just place join 542 in there, type it in there, and it'll save you those initial $5 to become a member. I believe Shannon and I are a little ahead of time, very, very little, but if you have questions, you can unmute, you can drop it in the chat. We're here to serve and here to help. Thank you for having us. We're grateful to be here, and have a beautiful rest of the day, everybody. I wish my drink was only $5. Okay, well, you're getting the more expensive ones. That's what I think. They're probably like, I don't do tall, Krista. I do grande or venti. I don't live near schools first. Would I ever need to physically go into branch? Absolutely not, Nicole. A lot of our retirees are actually out of the state and they never come into a branch. You can do everything virtually. The only thing you can't do out of state is buy a home because we're only licensed in California. So you can actually do everything online. I'm going to be real with you. I have 3 kids and a bonus kid. You will rarely ever see me at the branch unless I'm working because I probably won't get anything done. So you can literally do everything from the comfort of your home. How can I get a lower interest rate if I have school employee MasterCard? You can give us a call. We can take a look at that for you. Our phones are open until 7. Did I hear that right? 2,000 max deposit per month? Yes, you did, Joanna. That is the max contribution you're able to contribute to your summer saver. The summer saver account is phenomenal. It really is. I'm not seeing any other questions in the chat right now. Home equity line of credit instead of carrying interest on a credit card. Yeah, I'm pretty sure the interest is lower with home equity line of credit. That's smart. What did you say regarding if you have kids? If you have kids, they can join and they'll become members for life, which is great because we have wonderful ways to help you build credit without pulling credit. And many financial institutions do not offer that unless you have a co-signer. So I encourage you to build, your children's relationship with schools first now. But other than that, I think we're all caught up.
One more question, and I'm trying to get an answer, but you might be aware about do we do automatic increases of credit card limits, or is that something members have to apply for to get a increase?
From my personal experience, you're going to have to give us a call,
Okay.
and you would want to apply for that. Yeah.
Okay, got it. Thank you.
Sure. Thank you. Did you see there was no fees associated with, there's normally a $5 fee, but today it's free. I'm going to drop that link in the chat for you now. So it's free to sign up. Use Join 542. Usually there's one $5 fee that's taken care of by us today. If you want to sign up for free, please, I encourage you to do so. But if you were to go in the branch or go online, there would be a $5 membership fee. It's one time, and it's how you become co-owner and member of the credit union. And basically, if you ever close your membership, we give you that $5 back. Which I hope you don't, because I've had people say, Krista, I closed my membership when I left the district. Can I reopen it? I'm like, nope. So if you open it, leave it open forever. Like I said, it's a forever thing. Can you have 2 summer saver accounts? You cannot. You're only able to have one. Either you're married, your spouse may have one if you guys have 2 separate memberships. But if you're both on one summer saver, you can only have one summer saver. Can you move over from current savings to your summer savers over? You can move your money over in increments of 2,000. So you can bring it over to a checking or your basic savings account, and we will add it to your summer saver monthly in $2,000 increments. We need to reopen. No, summer saver, once you open it, you have it just like a checking account. How do my kids join if I'm the school employee? You can have your kids come into the branch. I think you can do it online now as well for children. Before it was only in the branch. You can always call us. We can also send you paperwork to help you establish accounts. You should mention Summer Saver sums out to 0 every year. Yeah, it's like a liquid CD, right? So it's like you're saving for 12 months. So it runs September 1st through August 31st. You're able to put 2,000 a month in it, which I believe if you do that, you would earn close to $800 for the year, just under. And the max it can hold is 25K. So it will dump out into your regular account and begin all over again. Although it sums out to 0, we're able to basically keep that cycle going as soon as it is dumped out the very next day. So still a really amazing liquid free savings account, considering most liquid savings are earning like 6 times less, Can you roll your summer saver back into summer saver account? You can in increments of 2,000. But thank you guys for having Shannon and I. We appreciate your time, for you guys joining us and being here. Thank you for all that you do. And we wish you guys a beautiful day. Bye, everybody. And remember, my email's there in the chat as well as a link to join. So if you have questions that we didn't get to, don't be shy. Connect with me. I'm here to serve. Bye, everyone. Take care.